Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday, Jobs Report Friday market webcast. Okay, Jobs Report is in 29 minutes, so this is going to be quick. Look, here's the deal. Powell comments, we popped out of it. It's flagging back a little bit here. It gives both sides an opportunity to get done what they want to get done if they can execute on whatever the spin is off of jobs. My 20-second speech every time this comes around. Don't game the Jobs Report. I don't care if you read Barron's. I don't care if you read Market Watch. I don't care if you stayed in a Holiday Inn Express last night. You have no flying fuck of an idea what the hell is going to happen after that report comes out. So betting the house at 8:29 in the morning because you just feel like it's got to be this, that's bad news. Don't do it. Let the number come out. There's going to be a reaction range. Up, down, higher lows, lower highs, breakout, breakdown. You trade that. Why? Because your risk is defined. You take that 829 trade and you're wrong, you're going to hold on to it forever because the trade is about being right and showing that you're so much smarter than everybody else, and you're not. Everybody, when it comes to price, everybody is equally stupid, okay? If you're right, you're going to bail too quick because you got your hand, you stuck your hand in the cookie jar and you actually found a cookie this time. So either you're going to end up in a trade that loses a whole lot of money or a trade that makes a little bit of money, and it's a hell of a lot easier just to let the number come out, let the range happen, and then, ride whichever horse to victory wants to ride to victory at 8:31 and on. I'm expecting a pretty whippy reaction to this, a pretty uncertain reaction to it. Yesterday was a whole lot of consolidated whip. It was a good day for us. We had a good day. A lot of plus 10s on a third and out for us, which tells me that it's just like it's really whippy. Couldn't get anything that really held price. We had 120 handle runner all day. That was it. Everything else kind of whipped back into itself. And, the other thing I said in the room yesterday was if you're trading this thing, if you're day trading this thing, you're going to take some paper cuts. Like, you're going to take some hits. It's been that way all week. So it's either, and that's why we reduce, the maximum risk we ever take on any one trade is 6 ticks. So 1.5 handles. You can't run around with big risk because the overshoots and the whipbacks right now are running between 6 to 8 points, 6 to 8 handles, and that'll just nuke you right out of, like your account will look dramatically different the next day if you get stubborn and wrong, or you add back and there's a lot of bad stuff can happen. So stick to your risk rules, respect when something isn't happening, and respect when something just wants to be a choppy mess, which is kind of what was happening yesterday. These are big, wide, these are hourly candles. So you can see they're, the ranges on the candles are, for example, this one right here, 2 o'clock, 89.25 to 71. That's wide. That's a good thing and a bad thing. Overnight consolidating. So you see the Bollinger Bands were consolidating. We really have been consolidating since the Powell reaction. You had one little overshoot here, one little undershoot here. But other than that, you take this candle out and it's basically pretty much a flat line. So look, all I can tell you is if the jobs reaction is positive, they need to take out 4110, start taking a look here on the daily chart at a couple of areas that we've discussed. You've got this high up here, it's 41.75, and then 42 and change. Is it capable of doing that? Probably not, but I didn't really think it was going to go 150 handles to the upside a couple of days ago, and it did that. If the reaction is negative, look, if the reaction's negative, the bears need to have a day, like a big day, like a big FU Friday day, because they have lost a whole lot of critical levels this week. Monthly pivot, 20-day, weekly pivot, 9-day. They never got back to the 100-day. And it's not on this chart here, but they blew the 200-day too at 40.44. That's the 200-day exponential moving average on the front month contract. That's the one that I track. So if this jobs report reaction is negative, they need to press and follow through. They don't really have much trouble pressing, okay? They pressed here, but there's no follow through. You can't do this again. Because if you do it here, what happened yesterday and the fact that the bottom didn't fall out of it, there's potentially the chance to have, unicorns and rainbows on the Friday. Because we've seen that many times in the last, decade and a half, where it's just like, everything's great. We'll worry about everything on Sunday, Monday. Then this 4110 gets taken out. So what do the bears need to do? Look, I'm not going to sit here and say they got to close below all this. That's idiotic. But if they can seal off the hourly midband, if they can somehow close below the 9-day and put themselves in a better position to achieve with regard to the weekly pivot, then they're okay. Remember, we opened up basically on the weekly pivot, and the bears had 2 days really to seal it off, and they blew it. So the closer they can close to the weekly pivot today, the better off they're going to be Sunday into Monday. But it's all about jobs. All right, 24 minutes, we get the report. I'm going to shut up now. We'll get this thing up and running. And everybody have a fantastic day. Have a fantastic weekend. Be safe, be healthy, take care, trade them well. See you Monday.